All right. The date is currently 5 July and it's 10 minutes past 8. So it's a weekend. It's a Saturday. The markets are closed. So I was looking at what possibly could happen this coming week. And before anything, for the currency pairs or anything else, I always look at the dollar index. So as you can see, I marked the previous month high and previous month low. I started from the highest time frame, which is monthly, because I swing. So I start from the monthly, moving all the way to the 4-hour time frame. And moving down to the 4-hour time frame, as I'm analyzing, I saw this 4-hour fair value gap, which is also in the optimal trade entry. If I draw my Fibonacci from up here till down here, you can see that it's in the gray area, which is the OTE, optimal trade entry. And what validates this fair value gap is this resting liquidity below here. And as you can see, it's been in a downtrend. So you can mark this on your left as a break of structure, basically BOS. You see, break of structure, but I never marked them. I can visually see them. I just wanted to show you. Now I'm gonna move on to the currency pairs. The first currency pair we're gonna look at is the USDCHF. So I marked the weekly high and the weekly low, which is this down here. Is the weekly low down here. Then on the 4-hour time frame, as I'm moving down, I found a 4-hour fair value gap, which is also in the optimal trade entry. When I draw from the highest point till the lowest point, you can see that it's right below where we intended to go. So I mark this lower point of interest, should I say it like that? I mark the lower point of interest because it's much better, and there's also a order block inside the fair value gap. As you can see here, the fair value gap is this candlestick low and this candlestick high from here, which is also marking this. So it's also validated because of this liquidity resting down here. So this is the dollar against a different currency pair. So that means it has to be moving the same direction as DXY. As you can see, it's also in a downtrend. It's also bearish. So let's go to another currency pair that's also the dollar against something else. Let's see. So right now I have USDCAD open. So that means it has to be moving the same direction as DXY, which is bearish. As you can see, it is in a downtrend. Where a market structure shift and a break of structure right here. I marked them for you. Then I marked the monthly high, the monthly low down here. This is the monthly low right here. And then when I draw from the highest point till the lowest point in between the monthly previous month candlestick, you see that the gray area, which is our OTE, is right here, right below, just below that was an 4-hour fair value gap, and it's validated by this liquidity up here. So basically expecting something, let's say like this, liquidity sweep for coming to our point of entry, maybe something like this. Then we want to target that previous monthly low down here. So we enter on the 4-hour. This is a swing position. So these are swing setups. Now let's switch it up. Let's go to a currency pair that's a different currency pair against the dollar, which means you have to be switching directions. That we're supposed to be looking for bullish positions on different currency pairs. Let's see. Okay, so right now I have GBPUSD open, And let's start with the monthly high, monthly low. As you can see on the monthly time frame, I marked the high and the low. Then I'll move all the way to the moving down as I'm analyzing all the way to my entry time frame, which is the 4 hour. I found this fair value gap, which is also in the optimal trade entry. As you take your Fibonacci and you draw it from lowest to highest, you can see that it's clearly in the gray shaded area that I marked. And what validates the entry is the resting liquidity above. And you can see this is a bullish setup, which is different from the other currency pairs that were the dollar against a different currency pair, compared to this one, which is a different currency pair against the dollar. So those are bearish. The other ones were bearish. This one is bullish, as you can see. That's why it's important to look at DXY before looking at your currency pairs. And just to validate a little bit of more confirmation, you can see this break of structure to the left here, which after a break of structure we need a retracement, which is what's going on here. So we're gonna be looking for something like this, maybe. You see, then we target the monthly high. Your take profits always have to be your previous swing lows and swing highs. So here's another currency pair, which is euro against the US dollar, which means it also has to follow the same direction as GBPUSD. So I mark the monthly high and monthly low, you see. Then as I'm moving down all the way to my entry time frame, I found this 4-hour breakup block, which is inside a fair value gap, and they are both validated by optimal trade entry. When you take it from lowest point to the highest point of previous month, you can see that it's in the gray, which is the 70 to 60%, which is the optimal trade entry, and this liquidity above validates it. So I'm expecting something like this. Then I'll target the previous month high like this. Stop loss just below, somewhere around this. This is not a signal, I'm just showing you how I would approach this type of setup. So let's move on to another currency pair, which is also paired against the dollar. Okay, so right here I have AUDUSD open on the daily time frame. So every time you see me writing H4 or daily time frame, just know that I'm open on that time frame, which is where I found my point of interest. If I don't find a point of interest on my 4-hour time frame, I usually go to the daily time frame. If I don't find an entry on those two time frames, rarely I'll be on the 1 hour, rarely. So right now we have the weekly low marked and the weekly high marked, and then in between that we found this daily fair value gap validated by the optimal trade entry. When we look at the Fibonacci, you can see that this point of interest is right inside our gray shaded area, and it's validated by this liquidity up here. So a setup like this, I would wait for something like this to happen. I always enter on the 50% of a fair value gap, so I'll wait for it to go inside the fair value gap so I can find entries. Then I'll target this point. Let me mark it actually. Enter here, then take profit will be just here, right here, then stop loss below, right, something like this. So next week I'll update, I'll upload a second video showing how the price reacted to our points of interest. So right now, let's close it off with gold. Then I'll give you tips and other, I don't know. I'll give you tips at the end of what to look out for. Okay, so I have gold open on the daily time frame here because that's where I found my point of interest. So I marked the monthly high, monthly low. Then in between that, I found the daily breakup block, which is inside a 5 value gap. When we take our Fibonacci from the lowest to the highest, we can see that it's in the gray shaded area. So 50%, I think gold is unpredictable. So maybe the 50% of the breakup block is where you'd normally find your entries. And if you didn't know by now, gold is paid against the US dollar. So that means all the previous three currency pairs we were looking at all move in the same direction, which gold also has to move in that direction. So as you can see, gold has to be moving in the opposite direction of the DXY. Basically, let's keep it that simple. So if the DXY is buying, gold has to be selling. If gold is selling, DXY has to be buying. Vice versa. You get me? So what validates this point of interest is the liquidity resting above here. So liquidity has to be taken out. Then something like this is what I'm anticipating. Then targeting that monthly high up here. So I just wanted to, so basically the tip just to end off this session, this video, is before you look at your currency pairs or anything that's paired against the dollar, first look at DXY, which is the dollar index, before moving into those currency pairs, and remember how they move. So if you need clarity, just rewatch the video, so just to understand how they react to DXY, each currency pair. I'm tempted to add Bitcoin into the analysis. So for now, let's just keep it here. Next time I'll add Bitcoin, maybe if I see something. So yeah, see you next week.